What is going on, Hyperfam? Welcome back to the channel. So this is going to be a very short and sweet video. We only have 9 charts to go after. The first thing we're going to cover though, however, is the S&P 500 or SPY as always. So let's go ahead and see how we've developed since last week's downturn. We can see that last week's downturn came down to the 50-day moving average, dipped just below it, but quickly recovered back up. Now on the way back up, the recovery has been pretty weak. Volume overall has not shown anything special, especially when it comes to a time where earnings have been absolutely phenomenal for a lot of tech companies. So it is a little bit worrying that we're seeing the S&P 500 push up to all-time highs, but it's doing so in a very weak fashion. Not to mention the very clear negative divergence that we have on the RSI. Now, I don't mean to be such a cynical person and continue to say that we have to be very careful when the markets are acting this way, but it does always help to keep it in mind, and it's always good to have an exit strategy in case things go south. There's nothing wrong with being modest on the market sometimes. There are times in the market where you need to be aggressive and play full offense, and there are times when you need to be a little bit more defensive and be a little bit more modest as well. So looking at SPY's chart currently, I don't fully trust it just yet. I would like to see some kind of strong volume or strong surge of volume that takes us above 390 into that all-time high territory. But as of right now, I'm going to continue playing things modestly, and I'm going to continue looking at the S&P 500 with a critical eye in case we turn back down towards the 10 and the 20-day moving averages, which is going to be our main support if we turn back down. And then if we break below that point, we can come back down to the 50-day moving average. It's not a good sign if we come back down to the 50-day moving average, because stocks that come down once again towards that 50-day moving average have a tendency to break below that point. So that's my take on the S&P 500. Going into tomorrow, we have to focus primarily on the upside. We are at a blue sky breakout. There's currently nothing stopping us. There's no resistance points in our way, considering we are sitting at an all-time high. So it's pretty exciting to see the market go into an all-time high, but it's also kind of scary to see it do so with a very weak fashion. So moving on from the S&P 500, we're going to move into the chart requests that we got from our hyper community. And some of these chart requests are actually pretty good, and some are just, we're looking over the day and seeing what happened with some of them. So first things first, let's go ahead and start with ATOS. So ATOS had a phenomenal day. We can see that the stock has had actually a very strong week in comparison to the rest of the market, where it went above that $4 resistance. Finally broke above the $4 resistance that it had made last week, and it pushed to $5, which would have been the price target for it today. Now the stock did maintain that $4 breakout. Notice that even though it dipped in the after hours, it still maintained that $4 breakout. That means it did not fail to break below. So every time a stock breaks above a resistance, it automatically turns into a support, and you can use that as a stop loss point potentially for your position if you are in it. Looking at their daily candles, we can see that the stock had a very strong day of volume, and they managed to close near their high. So although they dipped back down, they still managed to close pretty high up on where they gapped up in the day. Now, this is considered a high risk play because of the fact that it gapped up so much. The attraction to it was the fact that it closed near the highs, which means that the stock has still more potential to run. Looking at their weekly candles, we can see that the stock has had a surge of volume over the last few weeks. This is a very attractive thing for a stock. We can see that the MACD is also crossing up. So we did take a chance on this stock, but the upside could be very, very strong if it does manage to break above that $5 resistance tomorrow. If it does break that $5 resistance tomorrow, we can start talking about a plan in which it can move towards double digits, but that's not going to be for some time. Another attractive thing about the stock is the fact that it finally broke above this the 200-day moving average. So when you're looking at weekly candles, especially with penny stocks that have been trading below those 100 and 200-day moving averages for quite some time, the weekly candles will tell you a lot, because they will give you a little bit of a gauge of how far the stock can just go. If volume above those moving averages is picking up significantly, then you may want to look into potentially holding a small position for a longer period of time, especially if the stock has a strong catalyst that's moving it. Next stock we're going to go over is going to be OCGN. Now, OCGN looks like also the same kind of idea, but notice that the stock is trading below the 100-day moving average. So it still has not broken above the 100-day moving average. But looking at the hourly chart, we can see that the stock is very much bullish so far. In the after hours, it did a it did a performance. It did a nice job at keeping its momentum in the after hours. However, it still hasn't broken above the highs that it made on Tuesday, I believe. So looking back at the week, we can see that the stock made a high of $3.73. Therefore, that should be our main focus for a breakout tomorrow. So the stock currently has made a double top. Notice how it got rejected twice at $3.73. We need it to break above that $3.73 mark to potentially move higher. The way that we gauge our price target is based on previous resistance points, and unfortunately the previous resistance point is a little bit high. You don't want the stock to go to $8 instantly. That's probably not going to be attainable. So you want to aim at a lower price target based on stock performance. As of right now, we do not have a clear price target for the stock, so I would suggest that you play this minute by minute. You don't take your eyes off this when you are trading it. And if it does break above that 100-day moving average, then you do have a good chance of it moving towards that $8. But as of right now, I would focus on a lower price target like $4 to $5. Next stock on our watch list is going to be Apple. So Apple and the electric vehicle. So once again, Apple is moving up on the news of a potential electric vehicle. They are looking in talks. They are in talks with Kia and Hyundai for potentially creating their electric vehicle. There are also other companies at play. So the first thing we mentioned today is that Apple needs to break that $138 resistance for it to potentially move towards that 140 and 142 price target. And the reason why these are our price targets is because the stock has been rejected off of these points prior to today. So we can look back at its history. We can see that the stock got rejected at 138 right here in the post market yesterday. We can also see that the stock had gotten rejected off of 140 multiple times in the past and has used it as a support. Finally, we have a second price target of 142 for the stock because of these two rejection points right over here. So you want to use resistance points as your price target points. Looking at their daily chart, we can see that the stock closed just below that 20-day moving average. So we do need them above that price point for it to be considered safe, or else they could easily turn back down. As of right now, the stock is creating what could be a bearish flag. Now, let's go ahead and see and draw this out to where you can see it on your end, because I know it makes no sense on Thinkorswim without drawing it out. I personally prefer TradingView.com to use their charts for drawing, so this could easily be a bearish flag in which the stock has had a strong period of selling, and then it came back around to bounce back up before potentially coming back down. So the stock comes down, pulls back up, bounces around for quite a while, and then comes back down as so. Now, this does not guarantee that it will happen. However, if it continues to fail at the 138 breakout, it could easily get sent back down to retest that 130 for support and potentially falling further. So just like the S&P 500, you have to look at Apple with a critical eye. Any stock in the broader markets is going to be very influenced by the S&P 500. However, Apple also influences the overall market because of how much status it has. You got to remember that Apple is a over $1 trillion company. Therefore, the more it goes down, the more likely it will pull stocks down with it in the same sector. Just like the S&P 500, we can see that Apple experienced a lot more selling volume than it has on the recovery volume. So it is one to keep an eye on. It's not one to fully trust just yet. I would trust Apple above 138, and then I would also trust it above 140. For now, I would still be critical of the stock's upside move. Next stock on our watch list is going to be VFF. Now, VFF is actually going to be in the cannabis sector, and these guys have a good chance of running higher. They have been dying to make this upside move, but unfortunately, market momentum hasn't been on their side, and they're also known to be slow movers. You can see that they have been moving up since their last earnings. Now, I'm not sure exactly how those earnings went, but we know that they whatever Wall Street saw, they liked. And the stock broke out of the strong resistance at $7. So it's pretty impressive that the stock has doubled. Now, the presidency of Joe Biden is also helping. The fact that cannabis is looking to be legalized on a federal level is also helping. So that's also aiding the stock. The stock does have a strong upside potential going into 2021. naturally because of that presidency. Looking at what they recently did, we can see that the stock had been wedging down for quite a while before they finally made that upside breakout above the 10 and the 20-day moving averages and above that channel down, wedge down pattern. You can see that there was a big breakout candle, and then there was a consolidation day followed by another strong day today. So very impressive so far, but it wasn't able to take the stock above that $15 resistance. So your primary focus tomorrow is at that $15 resistance. If market momentum is strong and the cannabis sector continues to drive up, then we are looking for an upside breakout on this stock. Now, don't worry too much if the stock fails to break out that from that $15 resistance. You have supports at $13.80, and then you also have another support at $13 to use as a potential stop loss. So don't be surprised, considering the stock is a slow mover, for it to continue to consolidate between 13 and 15 before making that upside move. It's very normal for the stock to come back down, bounce around for some time before heading up towards a higher price target. Next stock on our watch list is going to be Open. So I have never heard of this stock in my life. Let's see what they're up to. So far, the chart looks good. I'm pretty impressed. It is fairly a young company on the stock market. Therefore, we do not have a ton of historical analysis to base it off of. Remember, guys, we are traders, or we are technical analysis experts. Therefore, we look at charts and we look at technical analysis for us to base our trades off of. If we don't have a lot of historical analysis, therefore, all our indicators and all our charts do not have enough reinforcement at the prices that they're trading at for us to safely trade them, but we can still make a play on them. Looking at their daily candles, we can see that the stock has been forming what could be a pennant pattern. So it's pretty impressive that the stock continues to be in this smooth bullish uptrend. I like this chart. I like this chart a lot. I just don't know if it's completely ready for a trade just yet. Looking at them here, we can see that they're forming a pennant pattern. I would like to see the stock move its way somewhere above this pennant pattern and move its way towards $30 and $32 to eventually consolidate between those 2 points and break itself out. So what the very next thing I could see the stock doing is coming back down this way, pulling back up above that pennant pattern, breaking above $30, getting resisted at 32, coming back down and consolidating for some time before heading up towards a, let's see what price target we can give for this stock. Let's actually use Thinkorswim for this. This is Open. So we can actually see the stock going to a potential $32 and $34 price target. So I would give this one a $34 price target. It's pretty impressive. Let me see what this company does. This is actually an online platform for buying and selling residential properties. So absolutely phenomenal, you guys. This is actually a great company. Definitely adding this one to my watch list. There could be a potential play on them very soon. So definitely keep an eye on these guys. They could be something impressive. So 32 to 34 is going to be the very next price target. Before moving forward, please hit the subscribe button for me and hit the like button if you do like what you see. Next stock on our watch list is going to be SUNW, Sunworks. And if you guys are not familiar with where we're getting these stocks are all chart requests from our group. So if you are not in the hyper chat, these are all member requests. So fantastic requests so far. I'm really impressed, you guys. What are we looking at when it comes to Sunworks? So just like cannabis, the solar or anything related to clean energy is going to be booming in 2021 due to due to Biden's presidency. So looking at Sunworks, looking at their last few months of performance, we can see that the stock has had a surge of bullish volume. Over and over again, we see accumulation of bullish volume from the stock. And we see a very weak pullback volume when it comes back down, which is the key sign to any healthy and successful stock. You want a stock that has strong upside volume with weak pullback volume to say or show that bulls are still very much in control and they're still looking to move the stock up. So what happened today? The stock had an impressive day yesterday. The stock recovered from $16 all the way to $20. So very impressive move right there. That's a 25% move. However, the stock gapped up today. So it gapped up above that 10-day moving average, but it pulled back down towards 20. So it gapped up, made a high of $23.75 before pulling back to 20 and then closing just below their opening price at 21.40. What is our main focus tomorrow? So our resistance point to focus on tomorrow is going to be $22, and then the second resistance point is going to be $24. So considering the stock has made these very large upside moves from this channel down pattern, the stock could go either way. It can gap up again tomorrow towards 26, or you may see the stock do something along the lines of consolidation between 20 and 24 to eventually move its way towards 26 and then find its way towards that 52-week high of $29.30 before pushing up further. Let's see what price target we can give the stock. So far, I'm very bullish on the stock. If we're looking at a price target, we're going to see a potential move towards $30. So pretty impressive move attainable from the stock. So $30 would be the next price target, assuming the stock holds 20. If you are looking for entry on the stock, entry here is possible, and you can use that 10-day moving average as your stop loss point. So very impressive chart on the stock. There is upside potential. $30 is the price target. $32 is the second price target. Next stock on our watch list is going to be DKNG or DraftKings. And I keep saying watch list, but these are all just chart requests. However, DraftKings is actually a stock that we are holding. We've been holding the stock for quite a while, and we've mentioned it in our last two analysis videos that the stock has upside potential, especially that the Super Bowl is coming up, and DraftKings actually had a good news catalyst come out for them today, driving them even further towards that $65 all-time high. So there is very strong upside potential with the amount of people going into online sports betting. DraftKings is an absolute monster. They will be fine, in my humble opinion. They are a fantastic long-term play. So let's take a look at their daily candles. We can see that they have been gapping up nonstop. It's exactly what you need from a stock that you're in. Volume is very much strong on the bullish side. Looking at their shorter term candles, let's actually move over to Thinkorswim because they will show us a little bit of a clearer picture. We can see that the stock is fluidly moving its way up, and finally on the hourly candles, we can see that the stock is it's riding pretty well. The volume overall is pretty well. Today had a very impressive move in the pre-market. However, the move in the pre-market was so strong that it needed to consolidate all day until later on in the day we can see a surge of upside volume, and that happened actually across the market. But the last hour of the day had very strong volume, which tells us that we may continue to see it move up tomorrow. The next price target for these guys is going to be $65. You can use $62 and $61 as your support. I would personally use 60. The next stock on our request is going to be AACG. This is one of the stocks that had a monumental upside move, but there was absolutely no reason behind it. You guys want to be very careful with holding stocks like this because they tend to actually move back down in pre-market and come back even further the next day. So as of right now, I'm looking at this stock. There's really not much to say. The daily candles on it have one strong upside move. You want to be very careful with stocks that have a random surge of energy out of nowhere because what we mentioned earlier in the video was how much we base our charts off of technical analysis and how much we base our setups off of technical analysis. When it comes to a stock that doesn't have much of a healthy technical analysis, it's very hard for us to gauge their ability to keep going or pull back or come up or come back down. So as of right now, looking at the stock, there's no setup on it. I understand it made a massive move. If you missed it on the upside, then you missed it on the upside. Even if you got into it and you got out early, you can't blame yourself for doing such a thing. Is because this is not a stock that was, setting up. I mean, just look at DraftKings. This was a perfect setup. The stock was trying to break out of 58 to eventually move towards that 64. Here with the AACG, there was really no preparation for this point. The stock just randomly bursts out of nowhere and moves up. Therefore, these are not my favorite kind of plays. These are extremely high risk plays, and you can actually see how high risk these plays just are. I mean, it went from a high of $20 to cutting itself in half in the post market. So as of right now, we have no idea where the stock's going to open up tomorrow. If you are in the stock, unfortunately, the best advice I can give you is to potentially use moving averages as your primary support and resistance points for potentially entering or exiting the stock. Next stock on our watch list, the next stock on our requests, and the final stock on our request is going to be Zoom or ZM. So we have been waiting for Zoom to break out of 400 for days now, and it is coming. The $400 breakout is coming. Looking at the market the last week, there has been an interesting move with all COVID related stocks, especially in healthcare. Now, I understand Zoom is not in healthcare. However, when COVID related stocks start to move, it reminds us of what happened back in February, March, and April. When we saw all the COVID related stocks start to make their moves up, other sectors started to follow that were involved in COVID as well. Looking at their daily chart, Zoom has been fluidly bottoming out. So if we were to draw out a potential uh, pattern on Zoom, we can see that they are fluidly bottoming out. You can overall, the stock is showing us a very nice curve pattern, and it's not making any sudden upside or downside moves. Now you can see that we expected the stock to break out of 400 a while ago, but it hasn't broken out just yet. Now there's a very good lesson here, and that's trade what happens, not what you think is going to happen. Now, at this time, I thought that Zoom was going to break out of 400 and I was ready to go in on calls or buy a position or whatever the case may be. However, the breakout never came. Therefore, I never entered the position, and that's exactly how you should approach your trading. If the breakout is not confirmed, then hold back on the position, or perhaps maybe start a very slim position to catch that breakout early on and then add on to it when you do get that confirmation. So very key lesson, trade what happens, not what you think is going to happen. So Zoom still very much has the ability to move above $400. Our primary focus this week and going into next week is that $400 breakout. We still do have a $440 breakout price target for it, and then it can eventually move much higher. Considering it spent so much time in consolidation, and considering that we are trying to attempt an entry on a reversal, it is naturally going to be a tougher trade or a more choppy recovery until it breaks those significant resistance points. Anyways, you guys, I hope you guys enjoyed this video. It was nice, short, and sweet. Please leave a comment if you have any questions, and subscribe to the channel. Have a great night.